August's Forex markets are sending mixed signals, but here's what most traders are missing. Feeling lost in the Forex wilderness this August? You're definitely not alone in this struggle. While countless traders are scratching their heads trying to decode the market's confusing behavior, there's actually a hidden pattern emerging that could completely reshape September's trading landscape. But here's where it gets controversial. The market imbalances we witnessed back in July might be the secret catalyst that drives explosive moves next month. And this is the part most people miss. They're so focused on daily noise that they're blind to the bigger picture unfolding right before their eyes. Let me walk you through exactly how I'm positioning myself across four major instruments: DXY, EURUSD, GBPUSD, and XAUUSD. But first, let me ask you this. Are you trading the market you see, or the market you think should exist? US dollar index XYZ, the range that's driving everyone crazy. The dollar index just delivered another textbook rejection from the 98.5060 resistance zone this Wednesday, right after staging a dramatic comeback from the 97.70 support floor. Now here's what's fascinating, and slightly infuriating for many traders. This rejection could very well send us tumbling back toward the 97.80 vicinity once again. Pay close attention to one critical support level that's flying under most people's radar this week: the daily trend line stemming from July 1st's closing price. This technical barrier intersects near the 97.80 mark, creating a fascinating confluence with the established 97.70 horizontal support zone. However, and this might ruffle some feathers, my fundamental outlook remains completely unchanged from what I outlined in the weekly forecast. Those vulnerable lows sitting at 96.70 could become the market's primary target as we transition into September's trading cycle. You'll notice strikingly similar patterns developing across EURUSD and particularly GBPUSD. More on those explosive setups in just a moment. For the immediate term, the DXY continues its frustrating dance within the 97.70 to 98.60 range boundaries. But here's my controversial take. This consolidation might be exactly what we need for a massive breakout. EURUSD, the bounce that could change everything. EURUSD just delivered a powerful rebound from its range floor on Wednesday, presenting yet another golden opportunity for bullish traders willing to take the plunge. This currency pair has been locked in this particular range since August 6th, but don't let that fool you into thinking it's going nowhere. As I've emphasized in recent market commentaries, the 1.1810 poor high, what we call an unfinished auction, in professional circles, could act like a powerful magnet drawing price action higher throughout September. However, and here's the make or break moment, Euro bulls absolutely must conquer the formidable 1.1716 resistance barrier first. Should the Euro's buyers manage to achieve this breakthrough, suddenly levels like 1.1788 and 1.1800 transform from distant dreams into realistic short-term targets. On the flip side, any sustained breakdown below the 1.1580 floor would immediately expose the more vulnerable 1.1520 region to downside pressure. But here's what I find controversial about the current market sentiment. Everyone's talking about dollar strength, yet the euro keeps showing remarkable resilience. What does this tell us about underlying market dynamics? GBPUSD, the trade I actually took, and why it matters. GBPUSD just staged a spectacular recovery from Wednesday's session low, after encountering a powerful confluence of support factors around the 1.3440 level. Here's where transparency matters. I personally secured a long position on Wednesday at 1.3455, and I shared this trade setup with my VIP Discord community members in real time. So far, this position has been performing beautifully. But now comes the real test of character for GBPUSD bulls, the intimidating 1.3525 resistance zone. This level represents more than just a number on the chart. It's a critical horizontal barrier established back on August 12th, and it coincides almost perfectly with a descending trend line drawn from August's peak. Expect sellers to mount a fierce defense around the 1.3525 region, with fresh support likely emerging near the 1.3480 level. However, Any sustained breakthrough above 1.3525 on both the 4-hour chart and higher timeframes will unleash the bulls toward the 1.3580 target zone. As I've discussed in recent video analyses, GBPUSD may be eyeing those tantalizing buy-side single prints lurking in the 1.3700 region come September. This scenario deserves your closest attention, particularly if the bulls can systematically eliminate both 1.3525 and 1.3580 resistance levels in the coming trading sessions. But here's my controversial opinion. Most traders are underestimating the pound's potential for explosive upside moves. Are you prepared for what could be coming? XAUUSD Gold, the breakout nobody's talking about. Gold achieved a significant technical milestone on Monday by smashing through its July descending trendline barrier near the $3,370 mark, and it's now approaching some meaningful resistance around $3,400. While we might witness a temporary pullback from the $3,400 level, don't be surprised if gold sets its sights on the 3,430 highs next. That said, I need to be completely honest with you about my current stance. I'm deliberately avoiding XAUUSD trades right now, despite the market producing several attractive opportunities since July's trading cycle. The current price action feels too ambiguous and indecisive for my trading style and risk management approach. Key resistance zones to monitor for XAUUSD include $3,400 and $3,430, while critical support remains anchored near the 3,375 level. And this is where it gets controversial. While everyone's chasing gold's breakout, I think the real opportunities lie elsewhere. Sometimes the best trade is the one you don't take. The September setup that could change everything. As we prepare to transition into September's trading cycle, the question isn't whether volatility will return. It's whether you'll be positioned correctly when it does. Those July imbalances I mentioned earlier aren't just historical footnotes, they're roadmaps for what's coming next. But here's what I want to know from you. Do you think the current range-bound action across major pairs is setting us up for explosive September moves? Or are we heading into an extended period of sideways grinding? And more importantly, which scenario are you positioning for right now? Drop your thoughts in the comments below. I genuinely want to hear whether you agree or completely disagree with my analysis. After all, the best trading insights often come from healthy debate and diverse perspectives. What's your take on the current market setup? Are you seeing the same patterns I'm highlighting, or do you think I'm completely off base? Let's get a discussion going. Your perspective might just be the missing piece of the puzzle for other traders reading this.